Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Thursday, April 13th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here as always with Joel Elconin and Dennis Dick. On today's show, of course, the bank earnings are the story of the morning. We have PNC, JP Morgan, Wells Fargo, and Citi all reporting earnings this morning before the bell. We did have Pier 1 report yesterday after the bell, so not as big a deal, but still in earnings lane. We have some news from yesterday and also some ratings, as is the norm. Our guest today will be at 8:35. He is Dr. Alan Ellman. He's the author and the president of the Blue Collar Investor Corp. You can see all of his research and writings at thebluecollarinvestor.com. He'll be on again at 8:35. Joel, how are we doing the S&Ps this morning?
A little bit in the red this morning, trading down 4.5 points at 23.36 and a quarter, pre-market high. 23.44, just under your daily pivot. Came off hard around 3 o'clock around the European Open. Took out a key level, pair of lows from Tuesday and March 28th at the 33 and a quarter level. Went to 32 and a quarter, getting a little bounce. That will be the key to the remainder of the session. Looking at crude, a little bit weak on the close yesterday, but has battled back in the 53 handle once again. You can see a little red bar yesterday, but hanging in there today. And don't look now, but gold is approaching $1,300. Maybe we'll talk about that when Dennis comes on here. Nice little rally coinciding with a little geopolitical turmoil. Silver in the green as well, 18.54.5. That's up a quarter, or 25 cents, closing in on the $19 level. Well, Dennis, here we are on our Synthetic Friday and the official start of earnings season.
Yeah, kicking it off with 3 big banks this morning. Spencer will tell you 4 big banks. I'll tell you 3 and a little one. But JP Morgan, Wells Fargo, Citi, and PNC have all reported here. And the results are kind of mixed here. Spencer, where do you want to go first?
Start with Wells Fargo and Citi because they just came out minutes ago. So we'll start with Wells Fargo. Q1 EPS there, $1 versus 97-cent estimate. Sales of $22 billion versus 22.3. So they beat on the EPS. They missed on the sales number a little bit, and still waiting for more from that release.
Wells Fargo had been hit the hardest coming into this earnings season here, and we know it touched up to $60, $59.99. Don't tell me those big whole numbers don't work sometimes with the size on them, because on March 1st high it was right up there, and it's been pretty much straight down ever since, just leaking, and quietly here now we're in the 52 handle. So you're talking about a 15% fall here in Wells Fargo. You know, if you look at Citi, look at JP Morgan, the fall is a lot less in percentage points. Actually, Citi's only off now with a little bit of a rally here this morning. We'll get to it in a second. It's only off about 3 or 4% from the highs of the move here. But Wells has been leaking. They kind of got it right. It was an ugly candle yesterday, so it is leaking here again today. But I don't know. A lot of this, when you think a lot of this is starting to get priced in on some of these banks here, because they've been pretty weak here for the last month.
Well, let's just give you the pre-market action, then we'll take it from there. Pre-market low 52.69, and we are not getting away from that level. So hard to say that the low is already in. I mean, I'm just looking at, we've been talking about these financials for a while, and even though the SPUs had to sell off and rebounded, the financials just haven't been participating here. So not sure what that means for the long-term health of the market, but keeping an eye on that 52.69. Oh, we just made a new low there.
Yeah, it's still
boy,
selling.
oh boy. I mean, we're in a vacuum area, Dennis. Should we hasten to say we'll fill this little gap around 52 today?
Yeah, you can pull back here, but one thing I'm going to say, and just before you give our analysis, let's go and get the Citi and JP Morgan reports, and then we can analyze these 3 stocks all together as, each. So Citi reported at 7:57, just 3 minutes before Wells Fargo there, so you're talking 8 minutes ago. And Citi has actually quietly just given back all of its gains. It was trading up on the report. Spencer, give us the details of the report, because it has bled now and is actually turning to the red.
Well,
or
trade
getting
up.
close to the red.
Trade up because it had good numbers. Q1 EPS $1.35 versus $1.24, so they beat the EPS by 11 cents. Sales of 18.1 billion versus 17.8, so they beat that number as well. So that was Citi.
And then J.P. Morgan numbers, which came
JP
out
Morgan,
earlier, about 7 o'clock.
This is right. This is actually about 6:40. J.P. Morgan Q1 EPS $1.65 versus $1.52. Sales of 25.59 bill versus 24.9. So they beat both as well there.
Okay, so nice beat on the top and the bottom by Citi. A miss on the revenue for Wells. It's maybe why it's a little bit relatively weak here. But let's talk the pre-market action here for J.P. Morgan and Citi. Where's the high in J.P. Morgan, Joel?
All right, J.P. Morgan, I saw it trading up higher than it was. Let me go to the J.P. Morgan chart.
It's leaking too, big time.
86.95. Wow, what do you know? Just another whole number there, and now we're trading. 85.75. So the pop was sold here in J.P. Morgan, and kind of the same as Citigroup.
Yeah, the pops have been sold here. J.P. Morgan pop sold. Citigroup, what? Give us the pre-market highs for that one as well.
Pre-market highs, Citigroup, 59.30.
Okay, so 60 cents off the highs, and then Wells Fargo still leaking here, now trading 52.45. So I guess they're all, once the Wells report came out, both of these started leaking too. Like we know Citi came out, got the pop, then Wells missed, and now Wells is kind of dragging down the other ones as well. I mean, we're in the digestion period here. You just asked a question there a minute ago, can we fill the gap to 52? I mean, here we are, 52.27. So it does appear that it wants to do that just a few minutes later. And sometimes the best thing to do, in the morning is to sit back and let it digest. And what I always try to do is, I used to always try to do, and you yell at me for it, is, I try to pick the bottom. I come in here, this level's going to be good, I'm going to throw my bid out there. But then you would tell me, stop and wait for it to stop going down. Get the momentum on your side. Wait for at least a turn or something like that. And you know what? That's helped me with my trading. It's helped me over the years with my trading, instead of just trying to jump in here. And I catch myself doing it every once in a while. And I always think back to what Joel said. Wait for it to stop going down when you want to get the bottom in. And Wells Fargo just went straight down here. So there's no reason to just jump in and be a hero and call the exact bottom. Wait for it, a level, then it bounces a little bit, maybe comes back and tests that level, maybe then you strike. But when you're just trying to grab something when it's digesting an earnings report, going straight down here, it's a difficult game to call that bottom perfectly.
I just one little caveat to that. Let's say you're short 10,000 shares, right? And you have a big position and you're getting to move it your favor. I mean, obviously, it's a little different than when you're trying to pick a bottom to go long. But you could see, trying to pick a bottom here since this number's coming out hasn't been the big thing. But if you're trying to cover, a big position, hey, you want to buy it right, and it's going straight down. So a little bit of twist on that. Another thing I just want to point out is when we talk about when stocks go through an area quickly, I mean, boom, 52 to 53, took care of that in a day, right, back in November. So when a stock goes quickly up through an area, so is the likelihood when it comes back down through that area, it will go quickly as well. And it sure looks like we're getting awful close here to fill in the gap. 52.13 fills the gap. So keep an eye. That's the level. 52 evens, a nice whole number as well.
When you put it all in perspective, though, you kind of got a slight miss on the Wells Fargo revenue, but really, Citi, J.P. Morgan, similar reports. Nice beat on the bottom line, a beat on the top line as well. Wells Fargo a slight beat on the bottom line, and then just a little miss here. But you're seeing a little separation. Wells Fargo's trading down 63 cents. Citigroup's trading up 26 cents. J.P. Morgan's trading up 40 cents here. If you look at the other banks, they kind of don't know what to do here. Bank of America's is trading flat because you got a little disappointment in Wells, but you got the beat over there. So BAC is trading up a nickel. Goldman and Morgan, who we're going to hear from, I believe, early next week, is trading up. Both of them are slightly trading up here too. So, it's a bit mixed here with most of the banks trading higher and Wells just kind of lagging a bit, but it's so early yet. And that's the whole, point I just want to make here again. We've had these reports for 13 minutes. Big money managers haven't even had time to figure out what they want to do yet here. Morgan actually just went to the red. So, I think that's the thing that, the way I approach this is let's wait. Let's see, what they do the rest of the pre-market session. Let's see what they do at the 9:30 open and then try to get a feel for it. But these stocks all tend to move together, even though Wells and Citi and JP Morgan go in the opposite direction right now. When the dust settles, they want to move together more than they don't. So, maybe there's going to be a dollar separation because of the reports, but when you start to, adjust for that dollar and you put the charts on each other, they're probably going to look similar because all the banks like to move together.
Yeah, one final comment on the financials, and I'm not sure how you can qualify this, but since Mr. Trump is having, basically retracting on all his original campaign promises and backtracking, I think that maybe there's a little
Which
trepidation.
campaign promises are you referring
China?
to? Not that we're going to get political.
No, I don't want to get political.
I don't want to get political.
China's manipulator. China's not a manipulator. We're going to get rid of Obamacare. We're keeping Obamacare for now. I mean, tax cuts in 2017 might not happen until 2018.
Isn't that every presidency, though? I mean, they overpromise and underdeliver, for the most part, all of them. So I don't know if we can just say Trump, is, doing, a worse job or anything like
I didn't
that.
say worse job.
Not trying to get political, but just saying, I don't know about, under-delivering, because I think they all do that.
Well, I mean, yeah, they do to some extent, but I think, I think he made a little broader political statements on what he got elected on. But anyways, let's move away from politics.
I think he overpromised too much. He overpromised more than the other presidents when they were getting elected. Overpromised. So
okay,
maybe bit off a little more than he can chew. But PNC also reported earnings here this morning. We're trying to move it fastly away from the political talk before the chat gets all wound up. Spencer, give us the results for PNC Financial.
PNC buck 96 versus a buck 83. Sales of 3.9 billion versus 3.8 billion. So that's for their Q1. So they beat on the EPS and they beat on the sales.
Stock getting a little pop here in the pre-market. Very light volume. Only 4,600 shares are traded. We did have an outlier 100 shares traded probably on the report at 120.80. I think that's outside the regular range. It's already offered down here at 117.90. If it went into ridiculous rally mode, I think you're going to have all kinds of headaches up at 120, but I'm not sure we get there or not. It is a $116 stock, so, but all these stocks, again, a lot of these banks are going to start to move together here as they get further away from the price discovery period of their earnings reports.
That stock, that outlot wouldn't have traded at 120.80 if you would have been out there at 120. You're 2 and 3.
Me out there at 120?
No, I mean,
it would have been 119.99 then if I was out there at 120.
Yeah, I mean, I don't know. To me, I mean, I'm not even going to look at that print. I mean, there's a big low to keep an eye on here. Yesterday's low was 16, right in the 16 handle. What was our low yesterday? Our close was 16 even. Our low was 15.87. You also had a low at, I guess, 15 and a quarter. Maybe just, I'll give it a nice 115.50. If it takes that out, I think this thing's in a whole lot of trouble.
Jumping over here to your other earnings report from last night, which is not a financial. You talked about it when you were introducing the show, Spencer. Pier 1 Imports, PIR, reported last night and has been trading down for the entire after-hours session. Hasn't had a trade here in the pre-market, but is offered down. Give us the numbers here. We'll break down PIR.
Well, they reported for their Q4 EPS of 34 cents versus 33 cents, so they beat by a penny on the Q4 number. Sales of 528.4 versus 529.8 million. So they missed the sales number by a little bit. They see comps were up 0.2% for the quarter. As far as guidance for this coming quarter, they see their EPS at a 7 cent to 3 cent loss. That is worse than a 2 cent loss estimate. They see sales growth as being flat to up 1%, and comps growth in the 1 to 2% range.
Joel, what do you think about the Wicker share technicals here?
Well, it was 661 at your pre-market low, bouncing back up to the $7 handle. So we'll see how we trade around $7. I'm tempted to be a big fader maybe 2 or 3 days after this report because back in December when they reported, the gap and go went all the way to 968, came back and filled that gap and more. I think, though, one thing about Pier 1 Imports is, with the Amazon factor, I don't think you have to worry about it because I don't think Amazon's going to want to sell anything that they sell in their stores. So I don't think.
Why?
Wicker chairs. I mean,
they sell more than wicker chairs.
Incense and candles. I mean, I don't know.
I think they could sell everything that Pier 1 Imports. I know you were making a joke there, but I think this is definitely not Amazon proof. Pier 1 Imports is a shocking stock to me. We joke about this one, and we've talked about in the financial crisis. This is the one that got down to what, like a nickel in the financial crisis, and then it got to $25 a share, so it was a huge mover. Now it's back down here at $7, and I already always mention that, but it just goes to show you here, like, even, these, companies, they can bounce back. And, financial, and obviously it did, but I'm not betting on a Pier 1 Imports bounce back again. I mean, I go in these stores and I don't get anything in there. So, I mean, I look at it and I was like, everything seems overpriced and seems like knick-knack, patty-whack, give the dog a bone. And this stock here is one of the dogs, I think.
I just 650 area looks pretty big here. This is the monthly, but on the daily 650 and pre-market low. That just looks like a good area. That's the low it had before the bounce up before earnings. Came back down there in March, so 650 looks like a good technical level to me.
Let's jump over to Tesla here, because we had a big sell-off there yesterday. I mean, you knew it had been straight up forever. It was going to eventually have a couple days sell-off there. It did. It's just kind of hanging out here this morning, but, selling off over 10 points yesterday. It wasn't just Tesla. A lot of the Momos there. Amazon had a little bit of a rough day. Google was actually closed green, but, it did have a rough day for a little bit there. If we look at Apple, it had a rough day as well. Actually, inside day, its rough day was the day before, but give me your thoughts here just on Tesla as we break down below $300.
That is exactly what I was going to say. $300. I mean, if this thing, it just ripped through. I mean, it had a little pause. It had 290, 240. Did it just rip from, 240 to 313.73? So I think 300, I mean, you don't have a high or a low or, any particular close at that area right now. But man, oh man, let's say you're a long-term investor in this thing, and you're sitting on some profits. You hit another round whole number like that, and I mean, it wouldn't be prudent if you weren't taking some stock off here, right? I mean, it's going to go for 300 to 400.
Been an incredible run.
Yeah.
I mean, it can do anything it wants because valuation doesn't matter on a stock like this. Doesn't matter right now, anyways, because investors are all about growth and they think Tesla's got the huge growth. I mean, I've challenged the valuation from 200 and it's at 300 now, so I can keep challenging the valuation and analyze it fundamentally all I want. Fundamentals sometimes just don't matter, and right now they just haven't mattered in Tesla. They will matter someday, but I don't know if that day is anytime soon, and that's why I don't short the stock.
Right, so I'm just looking at 300. If it gets back up in that 300 handle, fails it to make a new high. I can see. I mean, there's some big gaps to fill underneath, so I don't know. I mean, I haven't got the bearish Tesla hat on yet here, but I think 300 is a big level, and just applying that theory, 900 in Amazon, right? I mean, you sprint it up, 923.73, coming back, coming into earnings season. Ooh, you got a little rise, a little wedge there in Amazon. So I just think even though you don't have something right at those whole numbers, 300 in Tesla, 900 in Amazon, big levels just to keep an eye on long term.
I mean, you could say the 140 level in Facebook too. I mean, and obviously different story, but all these stocks do tend to move together. The Teslas, the Facebooks, the Googles, the Amazon. You put the charts on each other and they all look similar. Facebook back below 140 here too. So, you got a lot of whole numbers, a lot of bogeys there that you can consider if you're trading, any of these momos.
I wanted to add that yesterday, the one Tesla headline that came across, actually this is this morning, the Tesla headline that came across our wires was that Inside EVs, their electric vehicle website, they reported that the Tesla Model S got a record-breaking EPA rating of 335 miles, which is very good.
The cars are awesome. I mean, just from what I see, obviously, looking at them, they look really cool. They're trying to get the pricing down. We've said that and trying to analyze it from that, perspective a lot of times. I don't challenge that. They make cool cars. They're getting the pricing down. But there's a lot of infrastructure costs. There's a lot to do to happen for Tesla to grow into the valuation it's currently trading at. And, I just don't think, I don't know. Maybe it can execute, and maybe it does eventually have the fundamentals to back up this price. But it's got to really go well. And that's what investors are banking on is, not for any hiccups. And I think there'll be some hiccups in the road. I don't think Ford and GM are just going to go down without a fight here. They're coming out with their own electric cars. They're going to have some cool cars as well. And that's why, everybody and their grandma here loves Tesla and they hate on Ford and GM. But, as a long-term investor, I use fundamentals. And I'll say it again, Ford and GM, sure, they're dogs, sure, they've been really perennial underperformers here, but at least if you're investing in those, you're getting paid to wait. 'Cause I do believe the dividends are safe, at least for now. Ford's trading with a dividend of 5. what is it, 5.34% now here. General Motors 4.47%. They're trading like they can trade like utilities almost. Although Ford has been really rough here as of late.
I maybe I should have Dana on the show. She works for Digitas and advertising for General Motors, and they have some sweet cars coming out.
They do.
Yeah. I forget what the names of them are, but one of them is kind of how I've been an SUV guy, a big car guy, go back and forth, and now that they're coming out with something that's like really like kind of like a combo. It's definitely a nice size sedan driving car, but it has a little bit more of that functionality of a small SUV. I forget what the name of it is, but they got some nice looking cars coming out. I really like this $34 level shaping up here. I think I might even take a long-term stab. I bet you the yield is nice on that. Nice consolidation after coming off. Real quickly, AAOI is on fire here. The company said it expects Q1 results to exceed guidance on Wednesday. Now, I don't know how much they expect it to exceed guidance, but this stock had just taken it lost a third of its value here over the last couple weeks, 60 to 40, and now you're right back up here at 51.30. I mean, if you've been caught long this thing, that's almost like a 50% retracement, right? Just
getting all the losses back right away.
$50 level of control there. I know it's trading above that level right now, but holy macro. Big move on supposed information that's going to be coming out next week. Keeping an eye on $50.
I was going to say, maybe I'll buy a Tesla. I'm in the market for a new car, so maybe I'll buy a Tesla.
Go buy a Tesla, because maybe
right.
I could take it for a spin. They're cool cars. I mean, there's no doubt they're cool cars, but I can't wrap my head around it, and I keep saying it, and I can't wrap my head how they can be worth more than Ford, and, just as much as GM, and probably eventually more than GM. I can't wrap my head around there, because every time I turn around, I see a Ford and GM on the road, and I don't have any Teslas in the area, so it just doesn't make intuitive sense to me. But I know how the market works, and it doesn't make intuitive sense a lot of times. It just goes on flow, and it goes on momentum. I've always talked how I'm an order flow trader. Well, the order flow just continues to be, coming in. The buyers continue to come into Tesla here. But I've also been in the market for 18 years professionally, and I've seen a lot of bubbles go up and up and up, and they seem to last a long time. And eventually, valuation matters. So just because valuation doesn't matter in the short term, in the long term it seems to always matter. And I just think Tesla's got to perform perfectly at this valuation.
Well, Dennis, one thing about the Fords, you see them on the road, but it's the side of the road, and they're broken. Ford.
Found on road dead.
Found off road like daily.
Ford, so. I've got a Ford and I've got a Chrysler, so I've got two. But I don't have a GM, but I've always had a decent luck with Ford. I know that's a pun that they're but I've had some pretty good Ford products. So.
All right, 824.
Get any car that's a lemon.
Going through the earnings parade, I know you mentioned there weren't much on ratings. Have we covered?
We've pretty much exhausted the earnings parade here, but we didn't jump into a few other stocks that I had on my list here. And actually, we might as well just cover the 2 or 3 downgrades that we had too, because the analysts are pretty quiet here today too. We do have Cognizant, CTSH. That is catching an upgrade from SunTrust here this morning. It is trading in the green. CTSH, been quiet consolidation here under the $60 level for the last month. So, you wonder, you had the big run up in February and then you pause, but we've been holding and trading in a range 58 to 60. I think I got to wait till it gets above 60 before I get interested, though.
Yeah, you got a lot of touches here at 60 and just above 60. The most recent touch of 60 was 59.95. That was on April 3rd. So, and even if you get above that, let's say you're breaking out, this thing's really rocking and rolling, you got a triple top right at the 60-30 area. So to me, this hasn't been up here in a while, getting a pop, getting a running start of 58.66, and just a little old upgrade.
Actually, we did miss one earnings report. Estraza reminding me, Haynes Brands did report earnings last night, HBI, and stock actually is trading up pretty significantly in the pre-market here. Spencer, give us the details, HBI, the report here, and then Joel will break down the technicals.
Hanesbrands reported. Let me look. Well, you know what? I see the guidance. I don't. Was it earnings or did they just give guidance?
What was the guidance? Guidance what
Yeah,
matters.
I only see the guidance. They see their.
Let's give us the guidance.
They see their Q1 adjusted EPS at 28 to 29 cents. That's in line with 28-cent estimate. They see Q1 sales at around 1.38 billion, which is about the estimate at 1.39. So they basically just reaffirmed their outlook for
Retailer
Q1.
reaffirming is usually good news because they've all been disappointing. So reaffirming is positive for a retail stock, and that's why HBI is getting a lift here in the pre-market. It's traded pretty heavy volume too. Already 50,000 shares that were traded this morning. It was trading fairly actively there last night. Kind of in breakout mode. Nice candle yesterday, getting above the 21 and closing above 21, and now we're getting into a gap area, Joel.
Yeah, this one has had some problems. I'll just give you the pre-market high, just over $23 at 23.11. You have backed off 60 cents from that gap all the way. Oh, man, gap into a gap area. You know how I love that. So 20. Let's see. The gap is between 20. We gap down. You need to get to 23.07 to fill that gap. You did it in the pre-market. So, man, a lot of people, I'm sure, will be liking to see this. You had a high, a double top in January and February of this year at 23.74 and 75. I guess, people still need to buy, T-shirts and underwear, right, Dennis? So Hanesbrands is not going out of business.
Jumping over here, Dr. J wants to know about NVIDIA. Stock is trading down another $1.32. Stock, it's funny how they can go from so loved to so hated very quickly here. We got the downgrade from Pacific Crest when we failed up at 110, and that basically kicked us right through the 100s. And we bounced around on $100 for a couple days, and now we've went through that level as well. And it looks like it wants to test that low that we had on the move at 95.17. I think it might test that today because we're now only 70 cents away from there. We talked about that on the show on Tuesday with Nick, and that was the level we were saying that it needs to hold. I'm still going to say the same thing. It needs to hold the $95 level. If it doesn't hold that, then you start thinking about $90. AMD, its brother-in-law here, is looking a little weaker on the charts. Obviously, Goldman hitting it there earlier in the week with their downgrade on the stock or initiation at sell, I believe it was. And they put an $11 price target on it. And AMD's down another 25 cents here in the pre-market too. So both of these stocks, which were very loved in January and February, have not been loved in March and April.
Let's just take a look here at NVIDIA here. Major test here at the lows in the lower 95 handle. This one has been moved around by analysts with the double downgrade a while ago, and then just as you got up near that 110 level again. I'm not going to short it here, but what I'd like to do is see a breach that level, then get another scrambling rally, maybe back in the lower 100 handle. I don't know if it's going to fill this gap, but this thing is at some long-term support really since November. You could see a nice decline. Also NVIDIA, and Dennis, you and I debated it a little bit. Goldman just They reiterated their conviction buy yesterday. It wasn't like a new rating or anything, but
yeah, they didn't. I don't even think they raised the price target. They were just basically came out with another report saying we still liked it, and I think their price target's up at 130. But you just made an interesting point on the show yesterday too, though. Bearish AMD and bullish NVIDIA is interesting because both those two stocks tend to move together.
Yeah, they do. And AMD I've been keeping an eye on this one ever since Goldman slapped that sell rating on it. Has not been able to fill the gap since they did that. We got a level we're testing right now in a pre-market. 1238, I see that as a low after you came off that initial 1555 high. 1233, that's your pre-market low, getting a little bounce. So big area, 1230 in AMD.
Jumping back to the ratings land, KB Homes is catching an upgrade here this morning at Raymond James. Stock barely trading up here, though. We haven't talked to home builders in a while, though. And KB Homes has had a nice little quiet run. Middle of February was $16, had lots of support there. Then we quietly, in about a week and a half, took out the 17 handle. Then in about a week, we took out we took out the 17 handle. Then another week, we took out the 18 handle. Then we took out the 19 handle. Now we're up here $20.13 here in the pre-market, just quietly consolidating again. But I mean, the trend is your friend here on KBH.
All right, let's take a look here. Not moving much off that ratings change. Dennis mentioned a nice, I mean, straight up. Let's see what happens. Triple top. They're trying to push this thing through 2020. Last three highs 2015, 18, 19. So I don't know. Big run up, couple breakouts here again. Not sure if this upgrade and a little bit of a weak tape's enough to push it to a major breakout and well up to 21. You also had a monthly high in March of 2014 at 2029. So good area here of resistance still for KB Homes.
Another reason B. Morris just reminded me that Kramer was talking about NVIDIA there last night, and he's saying that, and this is coming from B. Morris in the chat, saying Kramer suggests institutional investors have been ringing the bell on NVIDIA as in taking profits, and I don't doubt that. I mean, it's been an incredible stock. It's had an incredible run, so, maybe this is a lot of profit taking here, and sometimes these pullbacks here, if you find the 50% retracement of the recent moves, sometimes there are decent opportunities there, but if NVIDIA does take out 95, then I get concerned again.
How can you tell if it's institution selling?
You can't. I mean, all you can do is it's mostly okay. Well, let's stop for a second. What really moves, and I'm going to say it again. I've said this on the show a lot of different times, but what moves stocks is not your little retail traders. It's not, for the most part, your high frequency traders. Everybody thinks the bots are moving the market. The bots, are market making for the most part. They're short term. They're not in there, piling in a stock for weeks on end or selling a stock for weeks on end. It's your institutions. What still drives price at the end of the day is always institutional action because it's all based on order flow. And when you get Fidelity coming in and selling 5 million shares of a stock's going to go down. That's just the bottom line because there's price impact there. It's too much selling pressure there. So, maybe they do it over the course of 2 or 3 days and it shows up as a red candle on the stick. And the bottom line is it's still institutions that are your major price discovery participants in this market. And it's always been that way. It's just done in different ways. Your institutions now don't do it like they used to, where they throw out big orders there. They hide their orders, they break them up. They're using their own algorithms to do it. And but those algorithms over time, if you're using VWAP, it's still going to put impact into the price. Maybe it's less impact than it was 10 years ago or 15 years ago when they were just throwing the big orders out there. But there's no other big orders out there, so you can't go and throw a 1 million share order in something anymore because everybody's going to step ahead of your order. So, they break them up. They're smarter about it. But at the end of the day, it's still institutions that move price. So when you see NVIDIA coming off 120 to 97, it's not because, every retail trader with their 200 shares of NVIDIA is selling. It's because there's been some major players coming in there and selling stock.
All right. Dennis, Stock Hunter may be taking you out for a steak dinner because we got a bet. He thought the video would be 200 by June, and we got a steak dinner on it. So if it's not, so Stock Hunter,
yeah, you're gonna send me because Joel owes me 2 steak dinners.
So you're gonna get one from.
Trying to factor it out here.
I think he's in Toronto, so that you guys could meet in London or somewhere in between and do that. But all right, 8:33. We got another minute here before we go to our guest, and we got a good guest coming up today. It's a gentleman that I met at the Traders Expo in New York, Dr. Alan Ellman. He'll be on in just a minute. I just want to do a real quick recap of the S&Ps and the trading action that we've been seeing here. A lot of consolidation between this 2330 and 2350. We had your 50% retracement, and then we've come back down. But folks, you got to pay attention to that low from yesterday, which was 33.5. Or excuse me, 2 days ago you had another low at 33.25. 32.25 is the pre-market low. Now I'm not saying we're going straight down here to 23.1775, but just like we had all this resistance up here on the rebound, really trying to form some support here. So I think today's going to be a big day in the markets, needing to hold the 23.33 level. All right, now we are going to take our first and only break of the day. We're going to bring in Dr. Alan Ellman, author and president of the Blue Collar Investor Corp. We'll be right back. Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, working the boards. And we have Dr. Alan Ellman on the line, author and president of the Blue Collar Investment Corp. Alan, how you doing on this Synthetic Friday?
Good morning, everybody. Welcome. Glad to be here.
All right, so we don't have too many doctors on the show here, so give us a little bit of your background, your title, and how you ended up in the trading the options markets.
Well, I'm the kind of doctor that used to do root canals and crowns. I'm actually a dentist, and I spent most of my professional career as a dentist, but in the early 1990s, I started teaching myself how to invest in the stock market, and that ultimately led to my learning how to do stock options. So as a professional, what I was doing was self-investing, and I was successful at it. So I started telling others about what I was doing, and nobody seemed interested. But eventually I started getting invited to do local investment clubs, and that led to my writing my first book, Cashing in Uncovered Calls, in the year 2006, and that went right to #1 on Amazon on the topic of covered call writing. Ultimately, I've published 6 books since then, and I've written over 400 journal articles on the topic of stocks and stock options and produced over 300 videos. So I had to make a career decision because I was so busy with both my dentistry and with my investing and writing and speaking. And 4 years ago, I made a decision to sell my dental practice and devote full time to the blue-collar investor, and here I am.
Was there one particular event, an investing event, or something that happened in the markets that, really sparked your interest from being, a passive investor to an active investor?
Well, I was, back in the 90s, I was looking at both fundamental and technical analysis to evaluate my securities. And back in the day, there were people that were fundamentalists that said all you have to do is look at earnings and sales growth. You don't really need to look at the price charts. And then there were the technicians that just believed in the price charts. And I said, what's wrong with doing both? So I started doing both, and I was fairly successful at it, beating the market by a little bit every year. But then one day I was reading an article on self-directed IRAs. And in that article, it said that you could sell stock options in your self-directed IRA. And I was surprised about that because I had always thought that options were considered too risky. Why would our government allow us to sell options in a sheltered account? So I started to research it. The topic was covered call writing, my go-to strategy. And I started looking at it, and it became very intuitive to me. It kind of made sense. So I started actually reading every book available back then on covered call writing, and then I started paper trading and ultimately started trading real money. And as soon as I started doing it back in the 90s, and I wasn't as good at it then as I am now, I started beating the returns I was getting just buying and selling stock. So that became my go-to strategy actually up until this very day. So for about 25 years now, I've been using this strategy of covered call writing, and it was that article that I read on self-directed IRAs that motivated me to move from stocks to a very conservative form of stock options.
Question here, Alan. Just talking with covered call writing, because I've done it over the years as well. But I've always struggled with this, and I'm primarily an equities trader, and I used to write covered calls on my portfolio just to enhance the yield. But what happens, I find a lot of times when I'm doing the covered calls is that the stocks will, sometimes you get in a bullish bull market and you start getting called away on all your stocks. And you go into a bear market and you're taking major heat on a lot of your stocks. How do you kind of manage the risk when you're, running a covered call portfolio?
Well, what you have to do is you have to master all 3 required skills for covered call writing. The first skill is what stock or what underlying security are we going to select to write the call on. Now, a lot of beginner covered call writers will just look for securities that have a very high implied volatility and therefore return a very high premium. That's a big mistake because a high implied volatility security means it can go up a lot, but it can also go down a lot. So that's incurring risk that we don't need to incur if we're using a conservative option selling strategy. The second required skill, and I'm going to get into this in just a second, is what option are we going to select? Most covered call writers will just select the strike price that's slightly higher than the current market value of the stock. As an example, if the stock is trading at 48, most covered call writers might select a strike price of 50, agreeing to sell our shares at $50. However, there are times in a bearish market, as you alluded to before, when it makes more sense to sell an in-the-money strike, which is a strike lower than current market value. And that premium will give you additional protection because there's an intrinsic value component to that option. As an example, if we bought a stock at 48 and then sold the 45 call instead of the 50 call, well, that strike price is $3 in the money. That means if it's exercised, we lose $3 on the sale of the stock. So the premium is actually going to compensate us for that $3 plus a little bit more. We may get $5 on that premium. So we have additional downside protection in bearish or volatile markets. It might be appropriate actually in times like we're dealing with today. So the strike price selection is key to dealing with whether we're in bearish markets, bullish markets, volatile markets. And then the third required skill is position management. So what do we do once we enter a covered call trade if the price of the stock goes down, as you alluded to before? Well, there are things we can do, buying back the option, selling a lower strike, buying back the option, waiting to see if it whipsaws higher, and then selling that very same option in the same month, thereby generating two income streams. Or perhaps it means selling the stock and then using that cash to enter a new position. So there are ways of mitigating losses and even enhancing gains if the price of the stock goes way up. We can actually close our position at almost no cost if the price of the stock goes up high enough, and then generate a second income stream in that same month with that same cash. So again, the three skills, stock selection, option selection, and position management, is what is going to get us out of scenarios when the market goes way up or the market goes way down. But generally speaking, we're going to be dealing with neutral markets where most of the time we're going to be selling an option, and most of those positions we will not have to involve position management techniques. But when they do come up, we should be prepared to act in a non-emotional manner.
What about when it's coming into earnings season and you have a position in the stock? Do you approach it any differently?
Absolutely. You do not ever sell a covered call or even a cash secured put if there's an upcoming earnings report prior to contract expiration. Never, ever, ever. I've been hit over the head too many times with an unfavorable earnings report. And I may have generated a higher premium because the implied volatility of that option and that underlying security is going to be higher because of the earnings report. So yeah, you'll generate higher option premium. But if the price of that stock gets hammered because of a unfavorable report, then you've lost a lot of money. So I always avoid earnings reports. So if we're doing monthly options, which is my favorite, then that means that 4 months out of the year, you're not going to be in a particular security. And it also means that you're never going to be in one particular stock for more than 2 months at a time. Now, an exception to that would be securities that have weekly options associated with them. So during the contract month when the earnings report comes out, you could sell weekly, avoid the week of the earnings report, and then come back to it again, and then ultimately roll into monthly options. So there are ways of avoiding these earnings reports. And by the way, in that same vein, if you have a security that you're writing calls on, because a lot of people that have buy and hold portfolios use this strategy to generate additional income over and above the income and appreciation they've been receiving from these long-term buy and hold portfolios. One of the things you have to circumnavigate as well are ex-dividend dates, because the chance of early exercise of these options is greater if there's an ex-dividend date prior to contract expiration. And there are ways and specific strategies you could use to circumnavigate that issue as well.
Alan, just a question. Just wanted to get some potential, setups from you here. Is there any options, in stocks that you're looking at, doing this on right now?
Well, we have a three-pronged approach to analyzing which stocks are the best ones eligible for covered call writing and selling cash secured puts. So we look at sales and earnings. These are the stocks that the institutional investors, I know you alluded to that before in your pre-market discussion, the mutual funds, the hedge funds, the banks, the insurance companies, they love stocks that have growing sales and revenues. Then we also do a technical analysis. We use momentum indicators. We trend identifying indicators like, for example, exponential moving averages. We look at volume. And then we have we have some common sense principles like I alluded to before, avoiding earnings reports, minimum trading volume, and things like that. And then we come up with a watch list of stocks that are eligible for covered call writing. Now, just to give you a couple, and these are not recommendations, but just to give you a couple that are on our list this week, and our list is updated every single week, AMAT, CRUS, EDU, just to give you a couple of examples, MTSI, I'm just reading off my list here, STLD. So we usually have a list that encompasses between 30 and 50 underlying securities. And then we also have an exchange-traded fund report that we provide to our members as well. So you could do covered call writing on individual securities, which is what I do in my personal portfolios, or you could do exchange-traded funds, which is what I do in my mother's portfolio, because in general, exchange-traded funds are more conservative. They're a basket of stocks, and some of them are going up and some of them are going down. So in general, the implied volatility of that security is usually lower than that of individual securities. There are exceptions, like, for example, some of the gold ETFs. But generally speaking, selling covered calls on exchange-traded funds are, in general, considered more conservative. So I use that in my mom's account. And the specific stocks that I select, once I have my watch list of quality securities, is based on my initial return goals. So, for example, in my portfolios, I look to achieve a 2 to 4% initial monthly return for the underlying securities that I use in my portfolios. And for my mother, in her ETF portfolio, my goal is 1 to 2%. So a little more conservative, a little lower risk. In my mom's, she's 94, so she doesn't, she's happy with the $600 to $800 a month I generate for her in her account. And so one size doesn't fit all, different strokes for different folks.
We have your website up here. We just got a few minutes left. I know you wanted to highlight a few things on your site. Could you help us out with that?
Okay, well, for those of you who are interested, I've developed a couple of calculators that can be used to calculate your covered call writing returns. And if you look at the top black bar, there's a link that says free resources, including the Ellman calculator. So if you click on that and put in your email address that you see on the top there, you can download the basic Ellman calculator. There are also put calculators. There are a lot of files like stocks never to use for covered call writing. Those are called banned stocks. And there are user guides as well. So there's a lot of free information that you could use. Now, if you can go back to the previous or the top of the page there, you could see that we also have, if you could scroll up to the top of the page.
Yep, I got it. Takes a few secs. I got it.
Okay. Okay. There you go. You could see also that we have a beginner's corner on the far right, that little gold triangle there. And those are two 8-part video tutorials. One is on covered call writing, and one is on selling cash secured puts. It's free. You can download the PowerPoints if you'd like. And they're about 5 to 10 minutes. And it's kind of like the Cliff Notes we used to use in college, where it gives you an overview of every aspect of these strategies. There is also a link for the blog. I write an article every week. I've written over 400 journal articles over the years. That's also for free. We have a membership link you could see below the blue collar logo there for those interested in signing up for the premium reports that we give, both stock and ETF. We also do a monthly blue chip report on the Dow 30 stocks. So you could see here on the blog link, we recently published an Ask Alan video. I respond to some of our member questions in video PowerPoint format. Underneath that, you see the last article I wrote, Probability Analysis. So you can access those also for free. And if you want to get our newsletter to the right, you could just put in your name and your email address right into that box right to the right of the articles there, and you'll receive our weekly newsletter. It'll be delivered to your email box at 10 a.m. Eastern Time every Sunday morning.
All right, before we let you go, just one, one mistake, the one common thing that you see with new options traders, one pitfall. Could you point anything out along those lines?
Let me give you two. One of the biggest mistakes, and I alluded to this a little bit before, is that a lot of beginning covered call writers will look for securities that give the highest premium returns, and that's a big mistake because those stocks are very, very risky. I did that years ago with a company called Taser that developed stun guns, and at the time they were testing the efficacy of these stun guns at various police precincts throughout the country, and some reports would be very favorable, some would be not so. The price of the stock would whipsaw way up, then way down. As a result of this implied volatility, the premiums were huge, and I went out and bought a ton of Taser, and I was making great covered call returns as I watched Taser go down from 36 down to 6. So I learned my lesson regarding high implied volatility stocks. But the second biggest mistake that I see covered call writers make is they start too soon. They don't take the time to educate themselves. They don't take the time to paper trade and practice. It takes the average retail investor about 3 to 4 months to learn the 3 required skills. And if you go to my website and look in the store, we have books and DVDs. I've held the #1 slot on Amazon now for 10 years on those 2 strategies. You must take the time to educate yourself, practice a little bit, and then after 3 or 4 months, when you've mastered those 3 required skills, then you have years and decades to benefit.
We've been on the line with Dr. Alan Ellman, author and president of the Blue Collar Investment Corp. Great information, great educational lessons. Hope to have you back on again soon.
Thanks, guys. Appreciate it.
S&P futures can't really get off the mat here, trading down 5 3/4 points at 22.35 even. Big level on the downside, that pre-market low, 23.32 1/4. Coincides with Tuesday's low as well as your March 28th low. Dennis?
Banks have all rolled over here now. So Wells Fargo's continued and filled the gap that Joel was talking about. It's trading at 51.95. But not only that, Citigroup is now in the red here. So decent report for Citigroup. Got the pop. Now getting the subsequent drop. So not holding up here on their earnings report. JP Morgan is still in the green here. Only 30 cents though now. So significantly off those highs that we were talking about earlier when it got up to 86.95. So actually it's a pretty ugly day here for the financials right now considering the report were pretty decent.
Johan Smith in the chat this morning asking about CMG, and we had that guest on, Chris Tyler, I believe, last week, and he was dipping his toe in the water, selling some 435 and 440 puts. Looks like he's doing all right on that. I mean, the only thing I can tell you is if you just hit a wall here at 460, I mean, it's there. I mean, it's sticking out like a sore thumb. You've had, 5 highs since 5 highs this month, right at the 459.5, 460 area. So, I mean, I don't know how what's a qualified breakout? You get above it today, you close above it. I mean, there's a seller there. Like you said, Dennis, institutional order flow. There's a seller. There's a seller of a lot of shares at this area. So I'm just keeping an eye on 460 until you can clear that. Not sure when they have earnings. Dennis, any comments on CMG?
You don't see 5 tops that close to a big whole number and there not be some type of seller there. And I don't see much in the book. I only see 2,200 shares of 460 in the book. That doesn't mean, there's not more there to go. So, 460 is the bogey here. I mean, for it to be in breakout mode, it needs to get above 460. It needs to hold above 460. 460. And that's the biggest thing is, a lot of traders will trade breakouts. And they'll trade them, and then the stock will go up above 460, and they're like, okay, it's going now. I'm buying 461 because this thing is going. And then sometimes what happens, sometimes they do go, and those trades work out for, those traders, the breakout traders. But it's about, your risk management on breakouts. And when you have a breakout, it's got to stay broken out. That's what I always say. If it gets above 460, goes to 461, 462, but then starts to come back to 459, 458, 457, that's not a good sign. You want the breakout to actually be a breakout. When I'm buying breakouts, I want it to stay above my breakout level, or at least stay in the majority. At least you can give yourself a little bit of room, but you don't want the thing going back down 455 after it's breaking out, because the breakout might become a fake out on you, and then that's when you can really take some heat, because you've caught a lot of short-term traders doing the exact same strategy that you were doing. So that's the one risk about breakouts, is that you have a lot of traders that trade those, and a lot of people are looking for the same setup. You could end up in a crowded trade, and that's why when you're buying breakouts, you got to be very careful, and you want it to stay above the level that you're doing on the breakout.
Dennis, you threw the word bogey in there, and B. Morris wants to know what you mean by bogey.
Top Gun. No, just, we use that. Both of us use that on the show. And it's just a number of significant relevance when I say a bogey. It's significant. So, maybe, we're using it, but that's how me and Joel use it. We have our own little lingo here. If you've been listening to us a while, you probably catch on to it. Sometimes it makes sense. Sometimes it makes no sense at all. But it's just a number for me of significant relevance. And 460 is absolutely significant, because you got 5 highs right in the same area there. So if we can take out that 460, take out that bogey is what I'm talking about, then you can start looking higher, and then, you think about it, but I always like to look, I'm a little bit of a fundamental analyst too. I like the technicals, but I like the fundies as well. And I'm still, concerned. We've run up a long ways on CMG. I still don't like valuation on this thing. So, I won't be buying this breakout just because I don't have all my ducks in a row. But there'll be breakout traders when this trades over 460 buying it. And it's a matter of whether it stays above 460 or not once it breaks out. I'm just saying if it comes back out down below it, sometimes those breakouts can become fake outs, and then, you got the crowd trade scrambling for people to get out, and the stock can get ugly on you in a hurry.
Another thing to look at, and sometimes I like to do this, when I'm looking at a chart, and you're like, oh, this run is so overdone. We've gone from 353, 52.96 to 460. This thing's got to come in here, and you can have that perspective on kind of things. But then if you look at a longer-term chart, maybe the party's just getting started here in CMG, right? You had the big pullback off the 758.61. I mean, you look at that. I mean, that you could call that a rounding bottom. You could call that a head and shoulders bottom on the monthlies. I mean, whatever you want to call it. I mean, this thing could be. I mean, for no reason, this thing could be at like 5 1/4. What would be a 50% retracement here? We've had 350, 357, 400, 200. I mean, easily this. I'm going to buy some 550 calls in this, Dennis. What do you think?
You're going to buy the outside calls. I hate buying calls, so I'm not going to be buying any calls.
I'm going to sell the
I agree with you on your sentiment here, though, is that this stock was over a $700 stock. Could it come back and be at 500 next week? Sure it could. But I'm just saying, if I'm buying that breakout, I want the stock to stay above the level that I'm buying for the breakout. That's the key with breakout trading, in my opinion.
Dennis, I've looked under bogey under both spellings. One is related to golf, and the other is an undercarriage with 4 or 6 wheels pivoted between beneath the end of a railroad
There's
car.
Not the Top Gun bogey on there?
I'll have to Google that.
Keep digging.
Okay. All right. Well, this is going to end the show for this week, right? Because of Good Friday. Everyone have a safe holiday weekend. Spencer, you want to give us what's on tap for next week?
Yeah, I mean, no show tomorrow, but the news desk will still be here because even though the market's closed, the news never quite goes to sleep. So we'll have some people in working on Benzinger Pro for your news junkies tomorrow. Like Joel said, no show for us due to the holiday. On the docket for next week, though, we do have some good guests for you. Paul Uke, one of our favorite biotech experts, Alan Brockstein, got to have him on Thursday because it's 420. Tim Anderson, Anne-Marie Band will join us. So a good slate of guests on the docket for next week. Happy holiday to everyone celebrating. Hope everyone has a nice long weekend, and we'll be back with you folks on Monday. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. Again, have a good weekend. We'll see you folks on Monday.
Dennis, I got you on there. It's the Top Gun quotes. Strike says, Ghost Rider, we have an unknown aircraft inbound Mustang. Your Vector 090 for bogey. So there it is.
That's my bogey.
What does that mean?
Top Gun.
Let's get out of here. What does that mean?
That means they're going to strike it. All right, everyone. Have a good weekend.
There you go.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.